The Federal Reserve Building stands in Washington, April 3, 2012. REUTERSJoshua RobertsFile PhotoLOND in Reuters. A renewed flare-up of tensions between Pyongyang and Washington put emerging markets on track for weekly losses, adding to falls caused by a repricing of U.S. interest rate expectations and higher Treasury yields. North Korea said it might test a hydrogen bomb over the Pacific Ocean, with leader Kim Jong-un promising to make a mentally deranged U.S. President Donald Trump pay for his threats to destroy the country. On Wednesday, the U.S. Federal Reserve confirmed it would reverse its stimulus program from next month and stick to its plan to raise rates, sending U.S. yields to 5-week highs, around 20 basis points higher on the week. South Korea's 1KRW weakened 0.2%. And was heading for a third week of losses, while China's yuan CNY looked set to fall for a second week. South Africa's rand ZAR and Turkey's lira TRY, both seen as vulnerable to U.S. interest rate rises due to current account deficits, both benefited from the dollar's retreat, but were still on track for a second week in the red. Markets are still digesting Wednesday's Fed meeting, which knocked some steam out of emerging markets. Christian Maggio, a strategist at TD Securities, said that, while emerging local currency debt would be competing with higher U.S. yields, the sector would also benefit from falling inflation and rate cuts at home. JPMorgan's GBIEM index of local debt recently saw yields fall below 6% to three-year lows, and they have risen only slightly this week despite the U.S. Treasury moves. The Fed outlook is at the margin putting slight pressure, but markets have taken the Fed reading in an extremely dovish way, said Maggio. The impact on emerging market yields should be negative, but it's hard to say how much, because in most countries you have low inflation, so there are two opposite forces here. However, the average spreads of emerging market dollar bond yields over U.S. Treasuries on the JPMorgan MB Global Diversified Index (JPMEGR) rose, and were up 5 basis points since touching three-year lows on Monday. Emerging stocks also suffered, dragged down by Asian bourses. TWI.KS11. The MSCI Index. MSCI-EF extended losses to fall 0.5%, the steepest daily decline in nearly 3 weeks. In Russia, ruble stocks were on track for weekly losses after 4 weeks of gains, with financial stocks weighing heavily. MSCI. Russia's financial sector is under pressure after authorities came to the aid of private lender BN Bank, the second private bank rescue in less than a month. The move has raised questions about the stability of a banking sector buffeted by an economic downturn and Western sanctions. South Africa's local bond yields recovered slightly after hitting 3-week highs on Thursday, when the central bank unexpectedly refrained from cutting interest rates. CAR 186. For a graphic on emerging market FX performance 2017, see TMSNRT.RS2E7 for a graphic on MSCI Emerging Index Performance 2017, see TMSNRT.RS2DZBDP5 reporting by Karen Strohicker and Sujata Rao. Standards Thomson Reuters Trust Principles.